Welcome back to the Money Show, wherein let's get going with our third discussion, wherein National Pension Scheme or NPS is a pension income investment scheme which brings an attractive long-term saving avenue to effectively plan your retirement through a safe and regulated market-based return. Now, upon maturity, individual gets a lump sum amount along with their regular income for a stress-free retirement. So what are the kind of schemes that are available under NPS? What are the best performing schemes, and does the scheme performance differ for different pension fund? Let's answer all these questions with Pankaj Matpal, who is the MD at Optima Money Managers. Very good evening, Pankaj, and it's a pleasure having you once again on the channel. So Pankaj, the first question, not many people know about the NPS scheme, so why don't you start telling our viewers, breaking down NPS for us?
Srishti, good evening, and thank you very much for having me on the show. See, NPS is not new now, so I understand that many people know about it. But yes, when it comes to features and benefits, and from time to time, government announces more changes in that. So maybe that we need to explain it again. And as today, I have an opportunity. So this NPS, basically, there are different models. For central government, as from their salary, 10% is deducted and 14% government contributes in that. So that is one model. Then there is state government model. Many corporates also have adopted it. So there is a corporate model. And there is one model called all citizens model, where anyone, whether you are in job, whether you are in employment or profession or doing your own business, you can open your account in that all citizen model of this NPS. So NPS, as you said, you told in the beginning itself, that is an investment plan first. So you accumulate money, and at a certain age, you transfer that accumulated money to the pension account where you get regular pension. So if you talk about this accumulation phase, where the PFRDA is a regulator, and this money is managed through different fund managers. So you have two choices: active choice and auto choice. And one thing more, one has to understand that in this NPS, there are tier 1 and tier 2. So first thing, when we talk about pension, it is tier 1, and tier 2 is only a savings account where you can deposit money and you can withdraw anytime. So let's focus on tier 1, which is a pension account. And as I mentioned earlier, that there are active choice and auto choice. So in active choice, you can decide that who will manage your fund and how much you will allocate in which asset class. When you go for auto choice, here your contribution in equity, corporate bonds, and government securities, it is automatically based on your age. It keeps your allocation keeps changing from time to time. So we discuss about the tier 1, which is a pension account, and in that, let's talk about this active choice, where you decide that how much you want to allocate in which asset class. So we have here equity, we have corporate bond, then government securities, and alternate investment. So you have choice to invest your money in different asset classes as per your choice. So investors who understand equity market, they want to take little higher risk, can invest in equity allocation more. And people who want the lesser volatility in their portfolio, they can invest more in government securities or corporate bonds. So like you can decide that where you want to allocate. So whole idea is that in long term, you accumulate a good corpus, and then after an age which is minimum 60 years, so at the age of 60 years, you can withdraw 60% of that amount what is accumulated, and minimum 40% has to be converted into pension. So this is in brief. So we can discuss more as we go ahead.
Thank you so much for breaking down NPS for our viewers and what are the different types of NPS that are available. But Pankaj, if I may ask that amongst the different types that are available, when you were just highlighting that the investor can actually decide on to how much amount they can allocate between the different asset classes, which one amongst them has been the best performer and how to go ahead with the selection process?
Yes. Srishti, this is very important. First thing, if investors or means NPS account holders, they do not have much idea about capital market. So for them, this auto choice is the best option. In auto choice, initially your allocation in equity is higher, but as the age progresses, your contribution in equity will get reducing, and your contribution means whatever you contribute, more will go into government securities. So that is the best option. But as we know that equity has potential to deliver better returns in long term, so considering that fact, one can go for active choice. Now, how much one should allocate? See, maximum up to 75% of contribution. If, for example, somebody decides to contribute every month 10,000 rupees, so 75% of that amount can go in equity. That is the maximum limit allowed to contribute. Now it is up to the account holder or NPS subscriber that how much they want to contribute. In general, because the pension product, so somebody can decide at 50% equity, and then out of 50%, they can invest in corporate bonds, government securities, and alternative investment. So that can be one choice. Or when you are young, you can invest to total 75% equity. Later, as you grow, you can reduce your exposure to equity. So it has to be decided by the NPS subscriber based on their understanding, their objective of their risk appetite, etc. But choice is there. Now, as you asked that where we expect maximum returns, so definitely equity is one asset class which has potential to deliver highest return in long term, and it has been proven here with NPS. If we see last 1 year even, that returns have been around 18% in last 1 year. Means there are multiple fund managers, but if you see that Kotak Mahindra Pension Fund or SBI Pension Fund, the returns have been more than 18% in last 1 year. If you see last 5 years return even, all the fund managers who are managing NPS have been able to deliver around 12% CAGR. So equity is definitely one asset class one must have allocation in that. After that, because corporate bond here is not like debt category, is purely corporate bond. And in corporate bond also, if we see in last 1 year, the returns have been around 8%. We see any fund manager, whether it's a like LIC pension fund has been able to deliver 8.33% in last 1 year, then followed by UTI retirement solution, where the returns have been 8.25% in last 1 year. And if we see 5-year CAGR, that has also been around 9%. So in that category also means returns are better compared to even fixed deposit. So that is also another choice. And then government securities, where the money is invested in government securities. There also, if we see returns in last 1 year, it has been around 10%. And in 5 years, CAGR is around, again, it is 9%. So if we see any category, so returns have been good when we compare with the mutual funds, even that these returns are quite attractive. And last category, which is alternative investment, there we see in last 1 year, LIC pension fund has been able to deliver 6.29%, and UTI retirement solution, it has been able to deliver 5.33%. So these are the top funds in this category. But if we see difference between the best performing and the worst performing, so the difference is very high. If you talk about equity or corporate bond or government securities, returns have been almost same for all the fund managers. But here, if we see alternative investment, here the difference is very vast, because SDFC pension fund has been able to deliver 8.56 in last 5 years. Okay. If you see this SBI pension fund manager, in last 1 year, the return is only 0.97%. where the best performing LIC pension fund, as I mentioned, delivers 6.29%.
Okay.
So one has to be careful. Little bit means when you go for different asset classes, but otherwise in general, if you see equity, corporate bond, government securities, returns have been almost
Fairly
same.
stable. Okay, okay. Thank you so much, Pankaj, for highlighting all those details which have been the best performing NPS till date, as well as what kind of a return expectation do the investor should have. But let's move on, and it's time to take all your portfolio related queries, because there are a plethora of funds that are available in the market. But amongst them, how do you select the best one, or rather how you should assess your money with the right fund in your portfolio? What are the criteria that you should be looking at? And to help you navigate through this maze, we have on board Pankaj Matpal, MD at Optima Managers, and we'll continue taking your portfolio related queries. But till now, if you haven't connected with us, just quickly would like to tell you that you can connect with us on our WhatsApp number, that is 865-797-4571, or you can also email us your queries on themoneyshow@etnow.tv. But Pankaj, coming back to you, and let's take the queries of our viewers, and we have a couple of email queries right now. The first query that I have is coming from Rajiv Bhargava from Mumbai, and he says that he has invested in Axis Flexi Cap. The fund is performing very poorly. What should he do right now? So this is a short query by him. He didn't share how much money he has shared, how much is the time horizon. So, but just on to the outlook, what kind of stocks are in particular mutual fund, and what is the expectation going ahead? Any hopes on recovery?
Yes. So let us see this flexi cap category, as we know that it has flexibility to invest in different market caps. So it's an equity fund, but how much in large cap, how much mid cap, that has to be decided by the fund manager. And from time to time, based on the market situation, they keep changing the portfolio. Here, if you see in this fund, the major allocation is in large cap. And the style is the growth style, basically. And we have seen after this COVID period that value style has done better. So when you're comparing this fund with other flexi caps, you will find that returns have not been as good as many of the funds in this category. But if you see the portfolio, it is really good. Allocation wise also is good. But only matter that, as I said, the stocks wise, that value style worked better than growth style. But now going forward, what I expect from this portfolio, that returns will be much better. There's a chance of recovery. If you see the allocation wise also in financial services, in IT, all the promising sectors are there. So I expect that going forward, this fund will do better. So considering that fact, I suggest to Rajiv that he should stay invested in this fund, and I hope that he will get better returns going forward.
Okay, that's the advice coming in for Rajiv. But moving on to the next query, and the viewer name is Suresh, and he says that he has invested, he has 20 lakhs in PPF, 50 lakhs in PF, and traditional investments like LIC. He wants to start an equity SIP, so which fund to invest, which can actually give good pension for his retirement, and he can actually save 50,000 per month right now. So what's your advice on this, Pankaj?
Question has Suresh mentioned that he wants to invest for pension, but he did not mention his age. So how many years are left for retirement? What is the investment horizon? That is not clear here. But based on understanding that he mostly invests in debt products and government schemes. So considering the fact, I will say that if you want to start with mutual funds, better that he should start with hybrid funds. So like balance advantage fund is one category. It's a hybrid fund category which can invest in equity and debt both. And that allocation can also be decided by fund managers from time to time based on the market situation. So like ICICI Prudential Balance Advantage Fund and Aditya Birla Sun Life Balance Advantage Fund can be good choices. But if he wants to invest for longer term, maybe 10 years, 7 years, 10 years or more than this, in that case, he can go even for pure equity funds. And there like Axis Nifty 100 Index Fund, which is a large cap index fund he can consider, or Motilal Oswal Large and Mid Cap Fund, that can also be considered, but only if the investment horizon is long. Long means 7 years or above. Then he should consider. Otherwise, as I said, balance advantage funds will be better choice.
Um, with this, we'll let you go on that, Pankaj. It was pleasure having you onto the channel, but we are completely out of time in this edition of the Money Show. Thank you so much for joining us. And viewers, it's a goodbye from me and the entire team who put this show together. Thank you so much for watching.